Well, as I say, financial markets were turning the screws on Italy this week, which led to a generalised panic. Let's see how things ended up. So over to Jayne Edwards. Jayne.
Thanks, Alan. Wall Street traders wiped away the memory of Wednesday's huge rout and went on a buying frenzy on Friday, giving the indices gains of 2% and setting up Asian markets for a positive day tomorrow. Investors on both sides of the Atlantic celebrated positive developments in the Eurozone crisis, with Italy's Senate backing its austerity budget and setting the scene for the resignation of Silvio Berlusconi. While in Greece, a new interim government was sworn in with the task of meeting the EU's strict bailout requirements. And encouragingly, Italian bond yields fell. Friday also brought more good news on the US economy, with a jump in consumer sentiment. World stock markets finished mixed after all the wild swings. The US and Europe managed weekly gains. The UK and Australia were steady overall, and Japan had the worst of it, down 3%. Now with local news, here's Marcus Padley.
Well, we've had the Papandreou plunge, the EU summit ascent, the referendum rout, the Berlusconi bounce, and finally the Italian 10-year bond yield panic. But despite all that volatility, the market really didn't go anywhere this week, and in fact it hasn't gone anywhere now in 6 years and 4 months. A lot of the major banks went ex-dividend this week, including the ANZ, NAB, Westpac and Macquarie, and the CBA had their AGM, which was reasonably well received despite the fact they were whinging about how tough it is out there, whilst no doubt they're making record profits. Other stocks going up on their AGM this week included Wesfarmers, who told us the tough retail climate continues, QR National, who confirmed earnings guidance, Downer EDI and Brambles. And stocks going down on their AGMs included Seven West Media, Leighton Holdings and Fortescue Metals. We had results which were well received from Orica and SP Osnet, and CSR was flat on their results. In other stories, we saw Computershare get regulatory approval to take over Bank of New York Mellon. The market certainly liked that, and the company confirmed earnings guidance. We saw Santos up after an investor day. Westfield Group had a third quarter update and confirmed earnings guidance. The market liked that. Myer had some first quarter sales which weren't that flash but were in line with expectations. They did tell us that they've seen an encouraging start to pre-Christmas sales. Billabong saw a bit of takeover talk, and John Fairfax sold out his last shares in Fairfax Media, a 9.7% stake worth $193 million. He would have got $1.3 billion if he'd sold them at the top of the tech boom. And everyone, of course, is drawing conclusions about what he thinks about the future of print media. Finally, Newcrest did the same thing as Telstra and Fortescue and a number of other companies who recently tapped the US bond market and raised $1 billion. Winner of the week this week was Adelaide Energy, up 43% after a bid from Beach Petroleum. And loser of the week was White Energy Company, down 52% after they told us one of their projects in Indonesia would not deliver acceptable economic returns.